Palantir Technologies Inc. posted a solid fourth-quarter performance in 2023, highlighting notable expansion in its commercial business within the United States and promising future prospects. The company's sales increased by 20% year-over-year, YoY, to $608 million during the quarter, while its commercial revenue increased by 32% YoY. With $2.23 billion in revenue for the full year 2023, Palantir anticipates further growth in the upcoming year, especially in its U.S. government business. Palantir Technologies Inc. has exhibited strong expansion in the business sector of the United States, driven by the triumph of its Apollo intelligence platform, AIP, and an array of boot camps designed to broaden its market penetration. In the fourth quarter, the company's U.S. government revenue increased by 6% YoY, but its U.S. commercial revenue increased by 70% YoY. The number of commercial customers in the United States alone increased by 55% year-over-year to 497. One use case from the company's success story involves $10 million in savings, thanks to AIP across the engineering, design, and construction sectors. Palantir's boot camps have covered about 200 use cases, and the company believes that its government web services and mission manager services present substantial growth potential. CEO of Palantir, Alex Karp, expressed confidence in the software's effectiveness on the battlefield and highlighted the company's capacity to quickly modify its product to meet the needs of the Department of Defense. Along with thanking shareholders for their support, Karp reaffirmed Palantir's dedication to upholding the freedoms and rights of the West and its allies. Investor attention has been drawn to Palantir Technologies Inc., PLTR, in the wake of its stellar 2023 fourth quarter results. Let's examine some important data to learn more about the company's financial standing and investing prospects. Palantir's market cap, according to Investing Pro data, is a healthy $36.38 billion, indicating investor confidence. As of Q1 2023, the company's gross profit margin over the previous 12 months was an amazing 79.92%, demonstrating its capacity to sustain profitability. In addition, Palantir's revenue growth within the same time period was 16.13%, demonstrating consistent business growth. Palantir appears to have a higher cash position on its balance sheet than debt, which offers investors financial flexibility and lowers risk. Furthermore, this year's predicted increase in net income for the business may be an indication of future profitability. These things are important to keep in mind if you're thinking about investing in Palantir. Over the past 12 months, commercial business has generated over $1 billion in revenue, a significant accomplishment. And year-over-year, commercial revenue increased by 32% in the fourth quarter. The company is growing faster because of AIP and boot camps, especially in the U.S. commercial sector, where sales increased by 70% in the fourth quarter of last year, indicating a substantially larger addressable market. The target was to conduct 500 AIP boot camps in October of last year. Having now completed over 560 boot camps across 465 firms, they have completely surpassed that goal. For the clients, they are using AIP to implement hundreds of actual, tangible use cases in production. A participant at the boot camp said, "It was amazing what your team accomplished in just 2 days. We have already come up with 100 applications for this." One person said, "It seems like there are countless answers. Palantir seems to be capable of anything." The addressable market increases significantly when LLMs and foundries are combined via AIP, since it makes use cases much more readily accessible. As a result of that expansion, they are beginning to see some initial momentum, but we are still just at the beginning of our journey to grab that market. The growing addressable market in the U.S., driven by AIP, is driving development in U.S. commercial business through both new client acquisition and customer expansion. The degree of client excitement and demand they are currently witnessing from AIP in U.S. commercials is something we have never seen before. They are currently intensifying our efforts to turn boot camps into enterprise agreements. Boot camps have been shown to help shorten sales cycles and speed up the acquisition of new customers. In Q4 of this year, the rate of new client acquisition for U.S. commercial increased sequentially to 22% from 12% and 4% in Q3 and Q2, respectively. Additionally, during the fourth quarter of 2022-2023, they more than doubled the number of U.S. commercial deals with TCV by $1 million or more. Additionally, the U.S. commercial TCV is increasing meaningfully on a dollar-weighted length basis, up 42% sequentially and 107% year over year. During the recent quarter, they inked numerous U.S. business agreements. To just a few, they inked agreements for more than $25 million with some of the biggest car rental companies, phone companies, and pharmaceutical and biotechnology companies globally. Then, they inked agreements for more than $10 million with an American holding company for consumer packaged goods, an American maker of automobile seats and electrical systems, a major Midwest health network, and a major battery manufacturer. Furthermore, they inked agreements worth more than $5 million with an American bank holding company, a regulatory body for horse racing, one of the biggest equipment rental companies globally, and one of the biggest independent non-profit cooperatives in the quick-service restaurant industry. Apart from conducting boot camps, they are expanding their distribution networks to promptly grasp prospects in certain areas, such as Japan. They strengthened and broadened their collaboration with Fujitsu in Q4 to allow them to offer AIP and data integration services to their international clientele. In order to facilitate the delivery of Sompo Care's real data platform to nursing homes and elder care facilities, they also inked an agreement with them. Before the deal closed, both of these represented the conclusion of months of work. They actively participate in all crises and war theaters as part of the government's work. The fourth quarter results remain modest and do not reflect the strength of U.S. government business. The ongoing processing and scheduling of significant prospective contract awards is partially to blame for this. However, it also depends on how quickly the department is scaling its software and AI initiatives to meet the demands of contemporary warfare, especially with JDC2. In response to the competition among major powers, the government is increasing its investments in software, which is America's distinct advantage. In addition to our deployment of Mission Manager and the First Breakfast projects, we are focused on deploying on the battlefield and in large-scale JDC2 programs. This is generating innovation in our engagement approach with the government and the defense industrial base. The Army has openly said that they expect the next phase of Titan to happen in Q2 of 2024, with a downscaling to a single vendor. Growth is being fueled by the addressable market's expansion, which is being pushed by AIP. This includes expanding relationships with current customers, as well as acquiring new ones. Their ongoing goal is to increase the number of boot camps they do with both present and potential clients. Based on input from customers, the AI platform is unique at this time. AI has fundamentally changed how customers now expect software. AIP and Foundry surpass expectations by facilitating the graceful amalgamation of software, AI, and humans to expeditiously provide operational results. They are not interested in a specific technical subset. Rather, they are focused on the entire problem of value creation. As a result, their platforms concentrate on tools rather than fine-tuning business process transformation or searching for tiny bits of insight. AIP is not a Q&A bot, not an agent framework, not a way to experiment, but an AI-powered operating system for the enterprise. Rather, it's a way to deliver. Their customer created a production-ready use case during a recent 2-day boot camp with the engineering, construction, and architectural firm, resulting in $10 million in savings. They developed an AI-powered disruption manager application using AIP, which uses AIP logic to interpret production disruption notifications and calculate the optimal new production plan. AIP converts the notification into a clear knowledge of the impact on the system by using LLMs to parameterize and contextualize the disruption and a linear optimizer as a tool. That's all, guys. Have a close look at Palantir Technologies and invest wisely. Keep subscribing to our channel for more information.